Good morning. I'm Pete Najarian. This is the take on this hump day. It's Wednesday. The grind is on, and we've got all kinds of news in front of us. But going back to yesterday, the news in front of us yesterday was retail sales and some of the declines being far more than expected. That sort of pushed markets down. We had the Dow pushing lower. It was down more than triple digits for the majority of the day. It did get off of those lows, but still finished closing down about 94 points or thereabouts. And then you got the NASDAQ, and the NASDAQ pressure all day long on the NASDAQ, and actually did not close too far off of those lows. As a matter of fact, closing off about 101 points to the downside. So a little bit of a hit yesterday. We had volatility trading right around that 17 level. We've been talking about getting down into those low 15s. And then yesterday, a little bit of that, as people were navigating through a lot of the news stories and the markets themselves, volatility index started up a little bit higher, moved up, and still to hold on right in that 17 range. Volumes did come back just a little bit, but if you go back a year and a half, 2 years, and you told me you're going to have a 34 million contract day, I'd say, wow, that's a monster day. And it is. But it is a little bit off of where we were. We were talking about those 40 million plus type volume days. AMC did lead yesterday once again, 1.3 million contracts, followed by Apple, which was right around 1.1 million contracts. Those were the two in the 1 million contract club. Everybody else was a little bit less than that, but a lot of activity, certainly even with the 34 million contracts, that is still a lot of activity. We had crude oil. It was up and above and holding on to that $72 range, and that was something that certainly had an influence on the energy sector yesterday because the names that were absolutely exploding to the upside. I'll go through a little list. You had energy up a couple of percent. FANG, which is actually, you've got Diamondback, you've got NOV, you've got ExxonMobil, which was a big story yesterday. We also had Chevron moving to the upside, Oxy, Marathon. You get the idea, Halliburton across the board. And we still had upside activity coming in the energy space, even with oil on this unbelievable run that it's made since November up towards this 72 and through 72 range. It's been really, really an incredible run for the energy space. Now, what was really kind of weighing on the markets yesterday, kind of interestingly, the stay-at-home stocks. You had Peloton down about 5%, Activision down about 3%, DocuSign down about 2.5%. So you get the idea, the stay-at-home, for whatever reason, that turned yesterday and some definite pressure there. And that was certainly something that also pulling onto the NASDAQ. We talked about the NASDAQ finishing down about 100 points. You had some of the financials under some pressure as well. Goldman Sachs, Citi, JP Morgan, certainly not trading very well. What was trading very well yesterday, however, was those financials that actually are not just banks or in some cases, but we're talking more on the credit side of things. Take a look at American Express, had a pretty nice day and what was a pretty red tape. And then take a look at that name that we bring up all the time. I continue to bring it up. I brought it up on the halftime yesterday. But Capital One, this is a name that just continues to be one of those names. And yes, it did have a little bit of a pullback, but yesterday, a nice spike of 2% to the upside and still hanging around near those highs that it's exploded to over the last couple of months. That's been something that's really played out pretty interestingly. We talked about Bitcoin, and we've talked about Bitcoin a lot. We've talked about it being right around that 40,000 level. That's where we find Bitcoin still, yesterday at least, holding into that area. So we come into today, and everybody's looking at the Fed, and everybody's looking at transitory, and everybody's looking at all this inflation data, and everybody's talking about what happened yesterday with retail. So there is a lot of news right now that can be moving around in the markets. As people are shifting and positioning, they're doing that ahead of the Fed, and that'll come later on in the afternoon today. So we'll know a little bit more, obviously, after that and the presser and all the rest of it, and that should be something that will be very eye-opening because we know what the Fed has said in the past. Are they going to stick basically to their guns, or will there be any kind of some sort of a change that maybe doesn't happen now, but a change at least in some of the opinion of the further out longer term and how the Fed is viewing things. So we'll find out a lot more about that. We look over at the Dow. The Dow was down just a little bit, down 30 points. Who cares? That's almost nothing. We had the NASDAQ up a little bit in the pre, but then we started to see the NASDAQ start to move more to the upside. Last I looked, we were up about 50 points, but the Dow, on the other hand, pulling back a little bit more and a little bit more, down about 60 points last I looked. That could change, obviously, and will change most likely as we get closer to the afternoon and we start to hear from the Fed chair and all the rest. So what was really pulling on the markets? Financials down. Now, nothing was getting hammered by any stretch, but financials were down about 0.75%. Energy was actually down about 0.75%. Tech, semis actually up and trading pretty decently, but materials, industrials, those were down about 0.5% as well. So we do have a decent portion of the markets in terms of sectors getting a little bit of that pull, and that's why we're seeing the markets down about where they were in terms of the Dow. S&P relatively flat. VIX did trade a little bit below 17. Last I looked, we were trading closer to 16.75, somewhere in that sort of a range. But yesterday, I got to tell you, we talk about healthcare a lot, and oftentimes healthcare names that are in specifically attached to the NASDAQ. But yesterday, for the unusual on the halftime, I just got to point this out. We talked about Centene, CNC. Now, we had some unusual option activity a little bit later in the morning. That's what I was using yesterday. That stock jumped today. I didn't even get a chance really yet to take a look at what the news was, because I looked over at the stock. It was up 3%. Next thing I know, it was up 7%. And it was trading the upside. All I can tell you is I've always said discipline, and I always use the expression DDA. Discipline dictates action. So when you get moves that are really rapid on shorter term options, I think that those are times where you have to react and have that plan in place and execute on whatever that plan was. Just as a heads up, I just wanted to point that out. So we were holding in crude around that 72 level, and a little bit just fluctuating around, really right around that 72 level, but we can call it 72. And it'll be interesting to see, do we have another pullback, which would be something that you'd expect a little bit after the run that we've had even recently, but a little bit more of a pullback. And then maybe is there more upside? We certainly are seeing a lot of energy hitting, and continues to hit, at least yesterday, in the energy space for unusual. That was more positive, more bullish than bearish. So that was something. Yesterday, I wanted to point one thing out. So yesterday we were talking about Amazon. We were talking about that as call of the day on the halftime report. And one of the things that I shot out to them, they said, Pete, you occasionally will be trading in the options, but we don't see you in the stock very often. And I will tell you why. It's a very expensive dollar-wise stock, and it makes it a little bit more difficult for anybody and everybody to trade because of the fact that the dollar-wise, it is a very expensive stock. Also, I think there are better ways to attack the same animal. So what I told them yesterday, we didn't get a chance to cover this, was, hey, look, rather than me being an Amazon, let's see, Amazon is a commerce company, right? And the other side of it is a cloud company. They are great in both, probably the leader. They are the leader in both, especially when we talk about e-commerce. Now, that being said, who's been jumping and getting right after them on the e-commerce side and doing an unbelievable job in terms of what they've been able to do from the C-suite on down and redoing stores and everything? Target. You hear me talk about it all the time, but if you just go back a year or so and you take a look at the charts, look at the performance. Year to date, look at the performance. When Brian Cornell stepped into Target, he did some miraculous things, made some bold moves. They redid a lot of the stores. They bought ship. They've done a lot of other things. And take a look at that stock, which has gone from $60 up into the 200 plus category. And on the other side of it, look at cloud. What about Satya Nadella? Satya Nadella takes over at Microsoft. Stock was in the 30s, the upper 30s. Now take a look at where that stock is. Again, year to date, just take a look at the performance you're getting out of that. So you've got cloud covered and e-commerce covered in two names where there's still names that a person, anybody out there, for the most part, has an opportunity at least to have a better chance to be able to invest or trade in some of these names. Just a little bit easier because dollar-wise, and everybody talks about it, will Amazon do one of these splits and everything else? When is that going to happen? All the rest of that. And we've seen that happen before, and it's worked very nicely. NVIDIA being one of those names most recently that comes to mind. So that's just something to keep your mind on why you don't see me in Amazon at all for the most part. And those options, oftentimes, we were talking about that beforehand, those options oftentimes, they're as expensive as an entire stock in many cases. So it's just a little bit more difficult to be able to navigate through them. So I got two unusuals. We'll get out of here, and you can get on with the rest of your day. So we've got the Fed in front of us, but before we get that, we've got Ford, and Ford hit today. Stock was trading right around $15. We had a pretty monstrous hit. We got 15,000 of the June 25 expiring, so it gives you a little bit more time. 16 calls, so they're going up $1. The 16 strike calls, stock's trading right at 15. Those are only costing about 12 cents up to about 22 cents at the time of this trade. Stock was trading right around 15. I got a second one for you. Pinterest. Now, this name has come up in the past. It's interesting. It hits fairly frequently, quite honestly. And stock was trading right around 71 and a quarter, call it. 7,600 of the June 25th expiring, giving you that little bit of extra time again. The 75 calls. So we've got two of them that are actually getting just that extra little bit of time going out in time, the June 25th expiring, to give you that much more time for these to pan out. So it could be pretty interesting. I like both those names. I think that we've got a lot of unusual already hitting in this first hour of trade or so. So it's going to be another really active day once again. Folks, have a great day of trading. If you don't understand the derivatives markets, make sure that you understand it before you ever enter into it. You'll have a much better experience. We've got great educators here. I'm really proud of our team. You've got books. You've got all kinds of different ways to educate yourself. But the derivatives market is the place to be. Folks, have a great day of trading.